So here's the 930 sell off here this morning. Okay. Look at all these wicks in here. This is also inside of that upper octant on the daily suspension block. And is that bearish fair value gap. Okay, you see that? So in here, rather tricky type of session. You're going to have to just let this do what it wants to do. Okay. And then once it clears this area here, it creates a fair value gap right there. I'll draw it in for you. So there's your first presented fair value gap. And consequent encroachment is not touched there. Rallies up. Same premise. Now watch. This is a very strong entry mechanism. I don't know why you guys keep asking me for entry techniques when I give you bangers. Like they're just, nobody's getting you entry signals like I give you. Okay. And I'm not saying I'm telling you where to buy at live market conditions. I'm telling you how to find them on your own. That's superior to just copying somebody. Okay. I already proved my stuff works, and students all around the world prove it. They make money with it. Okay. And they're the highest paid ones that's out there in the prop firm industry. So there's that. The fact that we couldn't get into consequent encroachment there, that's brilliant. But now we have that wick. Okay. Same idea. We're going to use this right there, draw it down to the below that wick. Is it touching consequent encroachment? No. That's perfect. That's a strong qualification that it's going to go higher. Now, notice what I'm doing. I'm teaching you order block theory and entry mechanisms around them after they're validated. That's changing the state of delivery. Now I'm teaching you when the fair value gap forms. It's the first presented fair value gap. Is there anything different being applied here? No. You're waiting for it to come down into it. Is it trading in the lower half? No. Is it leaving a body in the lower half? No. Is that strength or is that weakness? It's strength. It's validating this inefficiency. So we have this area in here, same premise. You have the wick that works into the fair value gap. So from the open of that candlestick, which is the body, down to the midpoint, consequent encroachment of that wick, anywhere in there that you can afford to get a long on, and use the low of that wicks as a stop. It's simple as that, folks. It's simple as that. And then once you have that, where's buy side? Right above here. Okay. It runs up, tags it right there. Beautiful. The fair value gaps are either first presentation, and if they're not first presented, then they are always anchored to a octant or a quadrant. Period. I don't care what you want to make it sound like or seem like because you want to sell some course or you want to sell some traffic, come into your channels or whatever it is you do. If you're listening to anyone tell you that volume profile and a low volume node, sometimes they might agree, but that's not the logic. That is not the logic. The logic is it's anchored to a quadrant level or a low, which is what? It's part of the range. So this bleeding over here, that creates in effect another PD array. Ooh, shadow. That's what it is. It's a shadow. Okay. A PD array simply called a shadow because it's casting a shadow over top of another imbalance. So this shaded area in salmon, you can grade that also. Now I'll just do it just for spits and giggles. Okay. Do that right there. And then we'll add all of these. I know you guys like to get my fib levels. Don't tell anybody what they are, okay? You start sharing this on the internet, and my whole scheme's been exposed. All right, so the market trades down. Look at that. It's that right there. That's the upper quadrant of that range. Now, you wouldn't look at that range. Supply and demand wouldn't look at that range. Volume profile wouldn't look at that range. Footprint wouldn't look at that range and grade that like that. See that? So when we have these things form like this, you have the opportunity to then measure any PD array that lays down. That means it has to be touching. It could be the high or the low. or anywhere in between, but it has to be touching it. That means it's anchored. Here is a wick. Right there, you see that? We open, immediate rebalance. Creates a volume imbalance, but look at this candlestick's low. See that? 30,175 even. What's the candlestick high on that? 30,175 half. So it went 2 ticks up there to meet that and trade back to this candlestick's close. Close is 175.25. To get that price, you're going to have to go 1 tick above it. And that's what you're getting there. 175.50, or 1 tick higher than quarter. Fails to trade lower, but it's working inside of the volume imbalance right there at that candlestick's open. Look at that, 173.75. So 173.75. This candlestick high, 173.75 volume imbalance. Perfect. You're not getting that with order flow. You're not getting that with volume profile. You're not getting what Elliott Wave. You're not getting that with Wyckoff. You're not getting it with Gann. You're not getting, you know what I'm saying? I could go through the whole gambit here. Everything else is second fiddle. Okay. And it's not me bragging. I'm trying to encourage you to just understand that you're light years ahead of everybody else learning what I'm teaching you for free. For free. Isn't that nice? It's almost like I don't need your money. So we have this fair value gap here. It's anchored to the low of that shadow, which is a bleeding over of 2 imbalances. Trades lower. Look at this. Oh, here we have another fair value gap. Maybe there was a low volume node there. No, there's your level. It's an octant. Okay. That's what makes it valid. I know you guys don't want to believe it's just this easy, but you got so used to calling what I teach it complicated. It's really not. It's complicated if you want shortcuts. It's complicated if you want a 5-minute trainer. But here we have it. Sells off. In here, we have another fair value gap here. Now, this is where you have to use like 16ths. Yeah. We can go down between the octant and the quadrant and split that in half. Yeah. You might want to start doing that. Now, I'm not going to do it because it's too good. But all you guys out there should start doing it. Okay. And then we create these relative equal lows here. And we're now just sitting right here with regular trading hours now closed.